I'm Devesh Patel, editor at Trade Finance Global. Today, we're at the FCI's 56th annual meeting in Seoul, Korea. We're talking about Africa and we're talking about the trade finance landscape. I'm absolutely delighted to be joined by Neil Shonhard, CEO at MonetaGo, and Nassourou Aminou, the Regional Director for Africa at FCI. Both, welcome to Trade Finance Talks TV.
Thank you. Good afternoon.
Thank you. Good afternoon. So, Nassourou, I'm going to start with you as the representative for FCI. What have been some of the biggest takeaways from the FCI AGM so far?
Africa is far from South Korea, so we have around 10 delegate companies in attend. So the major takeaway is very important for us to have more visibility in Asia, to see most of the members of the region. China, one of the biggest country trade in Africa. So we have also some other country. It's good for us to meet those members, to speak to them what we need in Africa. We need them to be in Africa to invest, and then also to look at all the new innovation in terms of the technology to put in place in Africa for the growth of the factory in the region.
Thank you very much. And actually, I'm going to call you up on your session yesterday on Africa, and actually collateral registries were one of the key talking points, as well as some of the key trade finance instruments that need to be implemented to grow factoring and to grow trade. And Neil, I'm going to point this question. So Afreximbank and FCI have really mentioned during this conference the need to drive collateral registries to help drive growth. And that was a really key talking point mentioned also at the Afreximbank FCI Zimbabwe conference. Can we just start off, what's a collateral registry?
So FCI use the terminology receivables recording center, RRCs. It's paraphrased by them quite often. Just generally, a registry is a tool, a centralized database, and in the trade finance context here, where we register trade finance transactions for various reasons. The collateral registry would be the registration of the security or ownership of a transaction as well. So you can see who has a lien on a transaction, and therefore with that, there's greater transparency, and you can sort of use that information for fraud prevention analytics and
Thank you very much. And Nassourou, from an FCI perspective, what are your thoughts on collateral registries? Are they the key to the growth of factoring volumes, which are clearly a big focus for the FCI community?
No, definitely. It's all the community, all the factoring industry in Africa. Why we need the collateral registration is just in Africa, there's a lack of financial information. It's not reliable. We have around 54 countries in Africa. So if you want to deal with the international factoring, there's a lack of trust because we can't trust someone in another country. So you need to have a reliable information. So we need also to develop factoring either domestic and international. We need a credit insurance. Why the credit insurance company don't have a data in terms of the behavior of payment of buyers in the market. So what happened now? We have in the market a lot of credit bureaus. It's mostly financial loan capture on the database, but not information about the receivable finance. If a supplier provides a service to a buyer, we don't really know if the buyer is paying on time or not. There is no law in terms of the late payment in the country. So to have a collateral register is very important, to have the data real time. Either supplier, either buyer are able to say, okay, I am able to pay this, or I already paid that. So it's very important for the development of factoring in the market in the whole region, as in Africa, to also improve the intra-African trade, also for extra-African trade. For example, if someone in China or US want to deal with someone in Africa, you need to know what is the behavior of payment. Is pay in 30 days or 60 days or 1 year? So it's 1 year, he can't do any business with the late payment for 1 year.
Thank you very much, Nassourou. I guess you've mentioned some key points: lack of data, lack of reliable information, and lack of trustworthy data. Let's talk about credit insurance. Neil, on yesterday's credit insurance roundtable, which I had the pleasure of moderating, it was made very clear that collateral registries will really enable trade credit insurers to participate far greater in factoring. What's your take on this?
The lack of data for a trade credit insurance company or an underwriter means that there's a lack of trust. So what they need is a history of good and bad actors, good and bad trade corridors, history of payment terms and the like. That kind of information standardized would and automated would obviously increase underwriting. Not only that, it would also increase liquidity. So collateral registry, in terms of increasing transparency and therefore trust, would create a greater confidence both for lenders and for underwriters to ensure that trade financing across the continent.
Thank you very much. Nassourou, do you agree? And does that actually translate into increasing access across the African continent?
Definitely yes, because we need to do a factoring. As you know, there's factoring with recourse or without recourse. Most of you want to increase their need without any protection. So that means in factoring is always include credit insurance. For the international factoring, either for export or import factoring, we need credit insurance. For supply chain finance, we need to have a cover for in terms of the mitigation of the equities for the single obligatory issues. So we need a guarantee under the buyer, because some of the banks don't have a lot of equity to just fund one buyer. So that means credit insurance is something most important in Africa to increase the capacity for banks also to lend, also for the volume of the factoring in the region.
Thank you very much. So let's actually talk about implementation, and I think technology is a real enabler here. Neil, if you don't mind, I want to talk about something that we haven't talked about on TFG for quite a while, which is blockchain, because it's been fairly absent from conversations in the last few years. But it actually cropped up in Neil Harm's speeches as a potential instrument for growth. Neil, what are your thoughts on blockchain as a facilitator for factoring? Is it dead?
Dead's a powerful word. Talking about this value proposition, speaking frankly, never has a registry with blockchain as the underlying technology succeeded yet in trade. We, as you know, have moved away from that. The reasons for that are as follows. Scalability has been a big issue. And if we're talking about a collateral registry on a continental scale, blockchain is definitely not the answer. The other reason really here is cost. Blockchain infrastructure, no matter which one you use, is still very, very expensive. For any solution anywhere to gain true scale, it needs to be as cheap as possible, especially in trade. Moreover, especially on the African continent, we want a solution to be deployed there that's cheap, if not free for all to use, so that it does genuinely have a mass amount of adoption and therefore effect.
Thank you very much. Nassourou, so we've talked about blockchain, credit insurance, collateral registry levy. Can you believe they all link up in the context of Africa? And I guess that is the key growth region that we've been talking about here at FCI in Seoul when it comes to the growth of factoring. So next year, when we're sat in Rio, and hopefully you agree to do an interview with us again, what do you want to see implemented and actually in motion in comparison to what we're talking about today to ensure that Africa is continuing to be on this positive growth trajectory for factoring?
Yeah, indeed. Technology, Africa can take advantage to leverage with technology to increase the development of trade. Is very important to those tools, because we gain a lot of part of market share with the technology. So it's something very important. We want to see in the next year or couple of years to use those technology to see the growth of factoring, and also to have more cover, to give more comfort underwriters, to give more cover on credit insurance.
Thank you very much. Neil, agree, disagree?
I agree. I mean, you look at Africa, I think it's less than 1.5% of global factoring. There's probably nowhere on earth that has the potential for growth like the continent of Africa. Implementing technology obviously would have a great deal of economic benefit there. And things like collateral registry, deployments of other technologies would also be a great catalyst for trade digitalization. Registries and other technologies drive harmonization or standardization of trade data, which would also further impact sort of intra and extra African trade too. So we've spoken about this a few times over the last couple of days. The potential for growth, would literally affect hundreds of millions of lives. And I think that's really incredible.
Very positive stories and lots of potential when we're talking about the key growth region for factoring in Africa. That was Nassourou Aminou, Regional Director for Africa at FCI, and Neil Shonhard, CEO at MonetaGo, talking to us at Seoul at the 56th annual meeting of FCI.
Thanks, guys. Thank you very much.